Ben Thompson. Now we're going to start with the latest inflation numbers that are out in the UK, and they show an easing in the cost of living. For January, inflation clocked in at 3%. That is down from the month before, all because prices fell sharply in January. They were down by 0.5%. Now, the annualised figure is still well above the Bank of England's target. Remember, that is 2% when it comes to inflation. Here's Chancellor Rachel Reeves on why she thinks inflation could fall further in the coming months.
Inflation has fallen this month to 3% from 3.4% where it was previously. The budget measures that I took in November will come into effect in the next couple of months, and that will see £150 off of people's energy bills, prescription charges frozen for the second year in a row, and rail fares frozen. So that will take more money off of people's bills, and that will see further reductions in inflation. The Bank of England and the Office of Budget Responsibility are expecting inflation to return to the 2% target within the next few months.
So that's the Chancellor. Let's talk now to Steve Nolan, who's Senior Lecturer in Economics at Liverpool John Moores University. Steve, good to have you here. And is the Chancellor right? She's optimistic that it's going to carry on coming down.
Yeah, I think fundamentally she is, because we're in this kind of, shall we say, abnormal situation where the government is kind of intervening to control inflation. So the policies she mentioned, specifically around kind of transport and energy prices, are projected to kind of have a quite dramatic effect on inflation, at least in the short term. The question is whether it has a longer run impact and whether the Bank of England will think it will have that longer run impact. The hope from the Chancellor is if people see inflation going down to target at about 2%, when they're coming to think about setting their prices or bargaining with their employers about wages, that will feed into it, and this kind of lower inflation will be embedded. But it's an open question whether that will happen or not.
Yeah, and Steve, there's a danger I sound like a broken record here, but we always have to remember that prices aren't coming down. They're just going up less quickly. So people will still feel the impact in their pocket. And if you look at the numbers, it's grocery prices that are still higher than maybe many people would like. And that's proving to be really sticky. Why?
For ultimately kind of like a number of reasons. You know, a lot of the drivers around the kind of changes in the economy over the last kind of 5 years are still there. And again, it's that idea about expectations that if like the food prices have remained high for quite some time, and so the providers of that will need to kind of take that into account.
Yeah, of course. And the Bank of England will be looking at this really closely. We know we heard from them earlier in the week. I mean, there's still pressure on them to reduce the cost of borrowing, therefore give the economy a bit of a kickstart. What do these numbers tell us about what their decision might be?
I think it gives it a bit more of a green light. And if you combine that with some of the disappointing figures we've seen over the last week in terms of growth, yesterday we saw unemployment rising, but we also saw something that's, whilst probably not feels like a positive sign for employees, is a positive sign for inflation, that the kind of wages, the rate of wages rising is decreasing. So I think that today has increased the probability of a rate cut in March.
Steve, good to talk to you. Thank you. Steve Nolan there, who's Senior Lecturer in Economics at Liverpool John Moores University. Good to have you with us.